Hello friends, and welcome to 3 a.m. Europe. Last year in October 2015, I made a clip about the world economy and the collapse, which I uploaded on YouTube, and there are so many things that have been happening the past couple of weeks and months that I feel I need to make another clip and put it up on YouTube. You see, since the 19th of October 2015, the Dow Jones has fallen more than 10%, and it is particularly the stock markets and also in the financial world we are seeing things falling as flies as never before. Just the first 13 days of 2016, $3.2 trillion were wiped out globally, and since last June, more than $15 trillion. I read a fascinating article not that long ago which said that the Royal Bank of Scotland had actually advised clients to brace for a so-called cataclysmic year and a global deflationary crisis, warning that the major stock markets could fall and that oil may reach $16 a barrel. And we're going to mention the problem of oil and the price of oil in a second. The bank's credit team said the markets are flashing the same stress alerts as they did before the Lehman crisis in 2008. Also, JP Morgan has turned its back on the stock market for the first time in 7 years. The investment bank is urging investors to sell stocks on any bounce. Even the IMF is cutting global growth forecasts and is concerned about the health of the global economy. In the Telegraph, we once again read that the world's next credit crunch could make 2008 look like a hiccup. And fears grow a repeat of 2008 financial crash as investors run for cover. William White, a former chief economist of the BIS, the central banks club, warned that central banks had used up all their ammunition. The situation is worse than it was in 2007. Our macroeconomic ammunition to fight downturns is essentially all used up. Debts have continued to build up over the last 8 years, and they have reached such levels in every part of the world that they have become a potent cause for mischief, he said. So major banks have not talked like this since the crash in 2008 and 2009. So clearly something big is going on, and what they are basically saying is that you need to sell everything, and they paint this picture of gloom and doom, which is rather strange because the only people that I actually know are talking like this, the people are considered to be conspiracy theorists or people that are, in the alternative media and so on and so on. Many analysts have found very interesting parallels to what is happening in the markets right now and what happened in 2008 and just before the crash. I know there are many people who are saying that, this is not like 2008, but personally I find some very interesting parallels. I could give you a lot of information, but I'm only going to present to you the most important stuff so you can make your own research to see whether what I'm telling you is true or not. And let me tell you this, there is an ancient saying that goes like this: there is no new thing under the sun. In other words, cycles, although they are nuanced, will keep repeating for the simple fact that we as human beings are not able or we are not willing to learn from our past mistakes. And that's why these cycles, although a bit nuanced, they are being repeated. And one of the main problems that we have right now is with China. Just before the crash in 2008, so also now, China's economy is slowing, and its annual growth rate is 6.8%, and that is the weakest rate of expansion in 25 years. Also, we look at China's debt to GDP ratio with a 50 percentage point increases in the last 4 years. And the question is, can China handle a crisis? Can China handle a debt crisis? Also, the debt bubble that we are seeing is something to keep an eye on when it comes to the US debt and many other countries' debt that basically are unpayable. Also, one of the big driving forces behind the panic in the markets is the collapse of the price of oil. This week, the first time since December 2003, oil has been traded under $30 a barrel. Dallas Fed president said that the low prices for oil will be there for a long time. Morgan Stanley said that it may fall to $20 a barrel if China's currency continues its plunge against the US dollar. And I even read an article on CNN that the price of oil may even be at $10 a barrel. Now, whether it will fall or whether it will, rise up and it will be at the price of 40, 50, or even 60, that's not the thing here. The thing is that it has so dramatically fallen that many companies and many people in the oil sector and in the gas sector are basically, they cannot keep up with this price. And the other reason why this is so important is because if you ask the banks about the price of oil, they say this is life and death. On CNN, we read that Wells Fargo is sitting on more than $17 billion in loans to the oil and gas sector. The bank is setting aside $1.2 billion in reserves to cover losses because of the continued deterioration within the energy sector. JP Morgan Chase is setting aside an extra $124 million to cover potential losses in its oil and gas loans. It warned that figure could rise to $750 million if oil prices unexpectedly stay at their current $30 level for the next 18 months. Even Citigroup built up loan loss reserves in the energy space by $300 million. Friends, these are not small money, I'm telling you that. The bank said the move reflects its view that oil prices are likely to remain low for a longer period of time. So whatever will happen to the banks when it comes to the problem with the price of oil, that is going to be interesting. And are we going to bail out the banks soon? I'm going to talk about it soon. Also, you take a look at commodity prices, and they are the lowest since 16 years. And so mining companies like Anglo American or commodity trading firms like Glencore and Trafigura are crashing. When you take a look at junk bonds, we see what happened in 2008, and they are crashing right now. You take a look at the comparison, and some people are saying that there is a comparison to be made with the subprime crisis. Now, if you think that this junk bond crisis was only something for 2015, there are many people who are saying that junk bonds could face a very, very ugly situation this year in 2016. You take a look at the emerging markets, you see the same thing. But not only that, things are being shipped across the US by rail. It has dropped dramatically. The drop has been so severe that these enormous drops only happen when one is either going into a recession or when you are already in a recession. And we read that all such drops in rail carloads preceded or were accompanied by an economic slowdown. Obviously, we have entered an economic slowdown. You take a look at another index, Baltic Dry Index, which is, according to Wikipedia, an economic indicator issued daily by the London-based Baltic Exchange. The index provides an assessment of the price of moving the major raw materials by sea. And this is one of the key indicators that experts look at when they are trying to determine where the global economy is headed. And so taking into account with Baltic Dry Index, we just see one more evidence that we have entered a global deflationary crisis. But there is one more, perhaps a biggest and the most important problem of all, that also shows us where we are headed, and that is the derivative bubble. You perhaps remember the banks that were too big to fail in 2008? Now there are 5 US banks that are considered too big to fail, and each of them have exposures to derivative contracts of $30 trillion. Yes, you heard me, $30 trillion. Wikipedia says this about a derivative that is basically a security with a price that is dependent upon or derived from one or more underlying assets. And the most common underlying asset includes stocks, bonds, commodities, currencies, interest rates, and market indexes. In 2007, banks were exposed to derivatives of $700 trillion, and we had a huge crash. Now it's $1.5 quadrillion. If these are numbers that are not making you afraid, I don't know what does or what should. Just as in 2008, derivatives played a crucial role when the economy collapsed, this derivative bubble is twice as much now as it was 8 years ago. This bubble is comparable to the black holes of astrophysics, those artifacts of gravity collapse which will irresistibly suck in all matter that comes near them. This compared to world GDP of a mere $55 trillion, itself a figure which is inflated by financial speculation. Warren Buffett calls derivatives weapons of mass destruction, financially of course, and time bombs. So when the derivative bubble finally implodes, where do you think that we are going to get trillions of trillions, trillions upon trillions, trillions of dollars that will be needed to fix things this time? We are simply running out of time. We are sitting on a bomb, and while the stock market may go up tomorrow or next day or the next week, this bubble plus the many other bubbles which we have spoken of in this clip, these bubbles are hanging upon us and they are going to implode soon, and there won't be enough money on the entire planet to fix it. So I'm wondering to myself, where are we headed? Are we going to see massive bailouts as in 2008? Or perhaps something that happened in Cyprus in 2012 and 2013? I believe what happened in Cyprus lays the foundation for what we will see in the near future, as banks, due to the derivative bubble and many other bubbles, will fail and will need to be either bailed out or bailed in. Now, what led to the crash of the Cypriot banks was that they invested in Greek sovereign debt. But hey, what was Greeks' mistake? They themselves had used over-the-counter derivatives in order to hide the real condition of the balance sheet, and their loss was equivalent to more than 25% of Cyprus' GDP. So Greece invests in derivatives. We are in trouble. Now, Cyprus and Cypriot banks are investing in Greek sovereign debt, and you can see what is taking place. The banks with their bad investments went to government demanding a bailout. The government then turned to the EU for a bailout. But the funny, at the same time scary thing is that if these investments would have been profitable, the bankers would have kept all of the profits for themselves. But since they were not profitable, who needed to pay for these bad investments? Private bank accounts. And who knows, this may be the first real testing by the elite to see how the masses would react in Cyprus. No uproaring, no revolution. Let us continue. The plan is obviously working. And I, and as many more respected leaders, see what happened in Cyprus, this will inevitably happen in the future as banks are going to fail. Everything that banks and the governments can get their hands on, bank accounts, pension funds, any investments, they are going to take it. Can we say that financial institutions in Europe, for that matter, in other parts of the world, are trusted, or that our money is safe there? So who are to be blamed for the crash that is before us? The banks? Well, yeah, partly. China? Partly, yes. Wall Street, as Bernie Sanders says? Well, yeah, partly. But what Bernie Sanders does not seem to understand is that the banks and the Wall Street, they will not be able to do what they have been doing, what they are still doing, and what they will do in the future, tomorrow, next week, next month, until the crash, is that it would not be possible if it would not be for the Federal Reserve Bank. Yes, you heard me. The Fed, with their failed monetary policies in the pre-08 crisis that actually led to the recession, something that they won't of course admit, and since they don't admit that they caused the recent financial crisis, there is of course no clue for a sufficient solution to our present problem. But most importantly, the Fed's failed monetary policies regarding the post-08 crisis is something that the Fed cannot excuse. Holding interest rates too low, as did other central banks, by the way. And now we have the BIS saying that we have no ammunition, so to speak, to combat the next crisis. But this failed monetary policy has also to do with this phony Keynesian financial short-term solution. The notion that if we are just keep printing money and hoping for the best, and everything is going to turn around nice and softly, and we are just going to make it. Unfortunately, this is not how the real world operates. Instead, quantitative easing has helped to create a full sense of confidence on Wall Street, as we have seen with QE1, QE2, and QE3. They have created an artificial wealth, but on Main Street, reality gives another picture. We take a look at Walmart that announced that it is going to close 269 stores out of 154 stores that are going to be closed in the United States. This means tens of thousands of employees will be affected. According to a study, Wall Street Journal wrote that 6 years later, 93% of U.S. counties haven't recovered from the recession from '08. Am I peddling fiction, as President Obama would say? Puerto Rico is in, to use the word of Treasury Secretary Jack Lew, in the midst of an economic collapse. Venezuelan economy is in such a sorry state that the government has announced a 60-day economic emergency to deal with the country's worsening crisis. French President François Hollande has declared what he called a state of economic emergency and says it's time to redefine France's economic and social model. I wonder what that redefinition is. Is that perhaps, as I've been speaking for the past couple of years, a new world economic order? Italy could trigger Europe's next financial crisis. Is that the case? We will see. And even George Soros says the EU is on the verge of collapse. Of course, he's been saying that since 2012, and he's maybe probably making some money out of that statement. But still, Albert Edwards, who is economist in Societe Generale, said that the US stock market can fall 75%. And Michael Pinto in the CNBC said that most importantly, the average market drop during the peak of the last 6 recessions has been 37%. That would take the S&P 500 down to 1,300 if this next recession were to be just on the average variety. Let me remind you, we are at 1,800. But this one will be worse. We'll see about that. So the Fed, together with other central banks' policies, have failed, and for each day this enormous bubble is getting bigger and bigger and bigger. But the bigger it becomes, the more dangerous it will become for all of us. But you say, as I read in a comment on one of the clips, that you say, but the Fed raised interest rates in December. What are you talking about? Yeah, exactly. That is what I'm talking about. Look what has happened ever since that fatal decision to the markets. The markets have been falling ever since December, ever since that fatal decision of the Fed. And now the Fed has locked itself into a corner. It will either decide, either in January, nobody thinks that, but March and in the future, it will either decide to raise rates. But that would be foolish, since you are only raising interest rates when you are coming out of a recession, not when you are headed fully blown into it, as most people say that we are entering a recession. So why would you do that? That would be foolish. Or secondly, the Fed is going to bring the rates back to zero and perhaps even to negative territory, as the Swedish Riksbanken has done the last year. But would that not be, what is the word I'm trying to use? Awkward, for a lack of a better word. How much can we trust the Fed and all these central banks? At the end of the day, in my opinion, what I believe we are seeing now is what happens when market forces are not allowed to operate freely, and where governments and central banks see it as their role to prop up the markets and keep the bubbles growing. You know, if we have a free market, don't touch it. Let the market decide. But the crash that I'm talking about and have been talking about, many people have been talking about it, is inevitably coming. We don't know when. Maybe come tomorrow, next week. I don't care. And as I have reported about the New World Economic Order that will be established, it is going to come also as the elitists and as the Pope, they have planned it in detail. And then it does not matter whether you have invested in gold or silver or what have you, but in something greater of this world. I'm doing these clips because I care about you, and so that people can awake from their slumber, so they are warned, so they are prepared, so that when the crash comes, they are not being taken by surprise, but they know exactly what is happening. Actually, Bible prophecy helps us to see into the future where we are headed. And I would lie to you if I would say that it is going to look shiny. No, rather a dark future is ahead of us. But I am so happy that that is not the main point of Bible prophecy, but it is Jesus Christ, who has foretold us about this, that the world in its final phase will look like as it is now. And these are signs of the imminent return of Jesus, when he is going to restore his kingdom. I know many of you have either shut down the clip right now or are laughing at me. Look at this religious fanatic. But friends, the more I see the world develop, and as I read and see the news and what is going on, I am more confident than ever before that prophecy is unfolding before our eyes. And that is not to be afraid of. But we can have the assurance that Christ is going to come back to take us where he is now. I am sure that you are not watching this clip because of an accident. Whether you are a believer or not, I think we can all agree upon something, and that is that a crash is coming. Something very, very bad is coming. So my question to you is this: why not trust in God that he will help you to go through this? Or why not trust him today, right now? You know, knowing what is ahead of us, I have such a heavenly peace in my heart, knowing that whatever is going to happen to us, you know, we read Revelation 13, we read about Bible-believing Christians that will be persecuted and that will be economically boycotted by the church and the state because they refuse to accept the government's legislations, the mark of the beast as the world's solution. But I know this, that the God who has worked miracles in the past in many people's lives, and the God who is working miracles in my life, that God is going to do miracles for me in the future. And you know what? He can do it for you also, if you allow. We are seeing the conditions of the world worsening, but it has not crashed yet. Why? I believe it is simple. Because of God's grace, so that you and I and everybody in this world can decide whether we will accept God's gift of salvation that is found in Jesus Christ or not, and then he will come. He is holding back the winds so that all of us can make a decision. And we are seeing that God is letting these winds because people are making decisions for his eternal kingdom. When will the economy collapse? I have no idea. Don't even ask me that. It may be this year, it may be next year. That's not the point here. The point is this: we are living in unusual times. And the point is that many of us are not spiritually ready for what is ahead of us. But this is the main thing. by Christ, by Jesus Christ, in faith in Him, you can and you will be ready. And you will also be ready when He comes. If you would be right with God today, you will be ready when Jesus appears, and you would be ready if Jesus would appear today. Therefore, this is my humble question to you. Will you decide to stand for Christ today? Will you decide to follow Jesus Christ? The choice is yours. Thanks for watching. Don't forget to subscribe, and don't forget to share this with your friends. Friends, the crash is coming, but there is nothing to be afraid of, because when you are in the hand of God, He is going to protect you. Don't forget that. Thank you for watching.